We have a lot of data that has come out over the past couple of weeks. We had good data today, and there's more data tomorrow, and the looming possibility that we may or may not get rate cuts, and that is in the unknown right now, which is not a good thing. And on top of that, we have some uncertainties in the tariff area and still have some looming geopolitical issues. So the market right now is kind of stagnating left to right. Not a whole lot of movement. In fact, the VIX is now up. However, there are three particular stocks that I think you should look at very closely with the market being down the way it is, and it poses a very strong buying potential right now that may not last, as all three of these stocks are fairly below their most recent highs, signifying a very strong buying opportunity. We're going to dive into these three stocks. But before we do, big announcement tomorrow, my free Masterclass webinar returns 6 p.m. Eastern, 3 p.m. Pacific. You don't want to miss it. Every student that's ever been at my webinars has said they've learned more in the 1 hour with me than anywhere else. I have a huge announcement during the webinar, and I'm also going to be taking your questions and showing you what you're doing wrong in the market. Don't put it off. Don't hesitate. Link to register is below. And just to let you guys know, there are hundreds of students that email me that didn't make previous webinars because they couldn't get in. Limited spots. The link to register is below. Tomorrow, Friday, September 5th, 6 p.m. Eastern, 3 p.m. Pacific. I look forward to seeing you there. The first stock that we're going to talk about, which is number 3, we're going to work our way up. The number 3 stock to add, it's not quite number 1 because it poses some considerable risk in my opinion, just because of how high it is now, although it is several dollars, in fact, $30 below its most recent high. However, it's becoming more and more of a buying opportunity, and I've waited a few weeks from this pullback to see the support that it looks like we're getting. So the number 3 stock to look at to potentially add to your portfolio because of the market conditions in September is Palantir. Palantir has 50% of its contracts in consumer and commercial, and it has the other 50% in government. So they're pretty strong in both scenarios, although in my opinion, still slightly overvalued. I would really like to get Palantir in the 120, 130 range, but right now the doors for me are opening as a potential to sell puts or get in. The longer it stabilizes at the current price and shows support and works its way back up, and news and the data coming out is good like it's been, it's just more confluence that the stock at this price is stable. So it's definitely in third place because of this risk that it could drop more, and if it does, you'd want a dollar cost average. But I'm telling you guys, long term, for the next 6 months to a year, 2 years, this is a great stock. When you look at Palantir, you can see that its most recent high was way up here at 190. So if you're able to get in the 150 or 140 range, this is a 25% return as all stocks eventually make their way back to their most recent highs, and usually sooner rather than later. So Palantir could come down a little bit more and then bounce and then work its way right back up. Look at AMD, look at Nvidia, look at Microsoft, look at the SPY, Meta. All of these stocks have done the exact same thing. So if you get into this stock somewhere here and it comes down here, then you'll average your cost and you'll keep averaging like this. And when it runs, this is the price target by end of year or middle of spring in the following year. So in the next 4 to 6 months, this is where I expect Palantir to go back to. Maybe it could be a little bit longer, but still, if you're averaging a price of 140 and you're getting out at 190 or 200, you're looking at a very strong 30% return. This is really, really good. Like, it might even be more than 30% if the stock comes up higher, but you're realistically looking at a really strong return. Palantir is a very strong stock. I have made a lot of money on Palantir. I was just telling everyone and coaching them that they should avoid it at 190 and wait for the pullback, wait for consolidation. We're waiting for more strength between 130 and 150. Lots of strength in here. There's a lot of support at 152. Just be aware that there's a very strong potential that the stock could drop into the 144 or even the 132 range. And if it gets really bad, it could go to 125. But if you buy some now at 156 and you buy some at 140 and then you buy some at 130 and then it consolidates and it starts to come back up and you buy more, your average is going to be like 140, 135. And the stock goes to 200. That's a lot of profits. But there is a little secret here that I'm going to let you guys in on with dollar cost averaging. Just a little tidbit from the Discord. When you dollar cost average, you never dollar cost average a stock that is flying down like this, ever. You wait for it to drop and bounce around like this. And we're waiting for a break of structure. It hasn't happened yet, but a break of structure is the most recent high. The moment Palantir breaks and closes above 164, it's broke that structure and it's going to work its way up to 177. That's how the stocks work. It's how the market works. So if this was to drop and to consolidate like this, literally like I'm showing you now, we would be eyeing the 146. So the moment the stock comes up at 140, breaks it and consolidates, we would dollar cost average. If it comes up and rejects, we would keep holding. But if it it comes up and breaks through and bounces up here, we would dollar cost average a lot more, and then the stock would run. You don't want to dollar cost average here and here and here because you don't know how low this is going to go. You really don't. You always wait to dollar cost average until you have this scenario and then a slight upward movement. Add a little now, break a structure, really start adding, so when it moves, you're in the run. You don't want to add on the drop. Anyone who added on Palantir's drop here, here, and here, they've added so much that now they have to add exponential amounts right here. See, anyone who dollar cost average along the way when Palantir was dropping, they're already completely in. They're maxed out in their safe 3310 rules, what I teach in Discord. So now they can't add anymore. And if they were to do that, they'd have to abundantly add to counteract all the adding they did here. Whereas if they just waited till down here in some consolidation, they could have done it all in the 150 range instead of 169, 165, or 160, depending on where anyone was dollar cost averaging. So hopefully this helps. The number 2 stock that you should potentially be looking at to add to your portfolio in this month of September, while the stock is currently down quite a bit, it's a buying opportunity. Number 2 is Navitas. I've talked about this stock quite a bit, and currently at the price of $550 to $580, this is a solid buy. Any lower is even stronger. It is actually in my AVP right now. If you're wondering what AVP is, I teach it in my Discord. It's based off of dark pool data and hedge fund data and years of experience, and it's stronger than Bollinger Bands, and I teach it in the Discord. I'm going to be briefly going over it in the webinar tomorrow, so you don't want to miss that. It is in my AVP, my D stochastics RSI, and my D fib I also use to calculate my AVP. And Navitas is right there, which is very strong. Let's take a look at the chart on Navitas. Let me show you exactly what's going on. They have proprietary technology in their server chips, which is GaN, which is gallium nitride. And right now, they're not completely profitable, but remember, whenever you're buying stocks, you really want to be buying them when they're down, buying them before the company achieves profitability, but looks promising. You don't want to be buying stocks that have already achieved profitability, that are already running, that are already at highs, because then you miss the move. This is a really strong opportunity. Just be safe. You must be safe. Do not add more than 10% of your portfolio into any one stock or position. I can't make you do that. It's up to you. That is what I recommend to be safe for your portfolio. You can see Navitas had a recent high of 951, showing almost a 2x return potential on the horizon. There's also this really, really big demand zone right here. This is a demand zone. I don't have time to explain it fully in this video, but what I'll explain to you is demand zones hardly ever get broken. So the bottom for Navitas would be $2, which isn't saying much considering it's currently over $5. This is a lot of downside. However, when you have a demand zone like that, you typically don't break below the recent pullback on the demand zone, which would be here. So right here would be the absolute floor, really. Highly unlikely Navitas has more than $1 of downside currently, because right here is the floor. You would never reverse this. It would take a lot of weak news and a lot of black swan type events to happen. Something catastrophically negative would have to happen to break through this. So this right here would be the support, which is 425. So there's only $1.25 of downside left. And the issue here is if you wait too long, you could miss it. Navitas could start coming down a little bit more, then just jump up one day like that, and then you've missed it. So we don't want to miss out on Navitas, do we? We definitely don't want that to happen. So currently you have to look at the upside, which is up here, way up here actually, $10, and the downside's 423. So we're $1.25 from the downside floor, but we are almost $5 from the ceiling. So on my AVP, we're near the bottom. Once I see a lot of stability in this range, I'll start adding, but I also don't want to miss out. You don't want to FOMO, but you also don't want to realistically miss out on a stock that's strong. So right now, what I would do on Navitas is I would sell $5 puts going a month out, and I would also buy some at 553, but leave yourself enough room potentially so that the stock drops to $5, which there is a likelihood that could happen. Right now, it's bouncing around this support area right here, which isn't very strong. The next one is $5. It's 480 to 510 right in here. So this could happen. So you want to add some now, and if it drops, add more later. And if we look at the recent earnings, that's the reason why. 3 before it were good. The most recent one was not. This is a buying opportunity. When you look at where the stock is, its most recent high versus its most recent low, it's trekking its way back to the most recent low, which is a buying opportunity, which we can also look at the 52-week range, and we can see that it's right in the middle, working its way down, and in the bottom of the day's range. So it's a pretty decent buying opportunity. Once it gets to $5, that is going to be even stronger. So keep this on your radar, add some now, because if we get interest rate cuts, the data's good tomorrow, and the data keeps getting good, tariff issues resolved, just overall things get better in the next 3 weeks, which they're very likely to do, this is what's going to happen. I'm not saying this stock's going to go all the way up like that, but I wouldn't be surprised to see data come out good, and then in the next couple of weeks, we get interest rate cuts announcement from Jerome Powell. I think it's on the 17th, and we see the stock make a move upwards of $1. And then at that point, I would say you're missing out. I wouldn't want to buy the stock at $6.50 after it was already $5, $5.50. So now is the time to do that. The number one stock that you should be considering adding to your portfolio right now, due to the fact that it's down quite a bit, not as much as the others. However, it has also been recently upgraded to overweight at almost double the price. And with the market in uncertainty, with the data that's been coming out and uncertainty surrounding some tariffs, as well as the interest rate cuts, now would be a good time to really look at this stock. So the number one pick in this video is Applied Digital APLD. Yet again, getting the top spot on one of my videos. This is a very